The US tech sector has seen an impressive quarter for earnings and revenue alike. Most of the FAANG stocks flew past already lofty expectations. Shares in Microsoft and Facebook hit record highs, and Amazon announced its largest profit in history. But with super high valuation multiples and other sectors playing catch up, how long can these runaway gains last? Joining me now to discuss this is Daniel Ives, Head of Technology Research at GBH Insights. So let's start with the quarterly results. What did you make of the numbers, and what were the major surprises, if any?
I mean, look, you definitely had a blowout, as we saw on Amazon, obviously Netflix last week. Just some of the secular themes in terms of e-commerce trends and streaming were definitely blowouts and much better than expectations. When you look at Alphabet, Google, it was really advertising growth. I mean, that's really the banner, that's really the key here in terms of fueling the engine. They missed on profits, which speaks why the stock's down, but ultimately that was really key from ad growth, and that's really a key to sort of that growth story going forward. On Apple, look, it's a good news, bad news situation. I mean, everyone's expecting a March guide down. We saw it. You're seeing weakness in iPhone 10, especially out of China. The cash influx with the repatriation, I think, helped sort of soften the blow. And I think numbers were not as bad as expected. But net, the smartphone ecosystem continues to be a more mature growth, where the core growth that you're really seeing is on e-commerce, on streaming, on ad growth on social media. So you're starting to see a separation even on the FAANG names, with Apple being on the other side of it.
Lots of stuff I want to pick you up on there, but if we could just start with Apple, because we saw that the iPhone 10 guidance, like you mentioned, was worse than expected, and one area in particular was in China. That's something that Tim Cook has really been pushing on recently. So with the iPhone prices so high and already incumbent players in emerging markets with a much lower price point, is that a potential roadblock for Apple moving into these new geographies, or big geographies they want to penetrate further?
Look, I mean, China, if you look at it, I mean, that really is going to be called 25, 30% of overall revenue in the next few years. And that's where they need to make big bets there, just given the growth opportunities. I do think the $1,000 plus iPhone definitely priced themselves out of that middle class in China, which speaks to why they're coming out with new models between now and September. And that's really the key right now in terms of on the China side.
So you talked about in your notes Apple's tax repatriation party, and I don't want to be the party pooper, but the tax changes are going to impact all sectors, and the effective tax rate for the tech sector is around 19% versus the S&P at 26%. So that's already somewhere below. Isn't tax set to benefit other sectors more than tech?
Well, really, I mean, if you look on large cap tech, you have somewhere between 300 to 400 billion coming in being repatriated. It will affect other sectors, but really large cap tech is really what benefits Apple, Google, Microsoft. You're seeing that. So I think that's where there's been a disproportionate benefit, just given the amount of cash overseas. And these are cash flow generating machines. So that's why that's the repatriation play has really been large cap tech. Even though other sectors will benefit, I just think disproportionately they're the ones that benefit.
So in 2017, the tech sector outperformed the wider S&P by a long margin, up 37% over the year. Incredible returns. But now we're seeing a much stronger growth picture. So do you think investors are still going to be willing to pay that premium to get into the tech sector when other sectors perhaps are going to get better returns now?
Yeah, I think you could see definitely catch up from other sectors, but it really comes down, when you take a step back, comes down to growth. The secular growth themes, they call it 25, 30, in some cases 40% growth, is in tech. And even on the enterprise side, whether it's cloud, big data, pieces of cybersecurity on the consumer side, e-commerce, streaming, as well as ad growth, you'll pay up for that. But it all comes down to numbers have to continue to go higher, which is why you see Amazon up. But ultimately, some of these names like a Google disappoint on profit. So that's where it's going to be the rubber meets the road in 2018 in terms of a lot of these names, if they can move higher. we ultimately think the overall tech sector is up 12 to 15% this year.
So on Amazon, one of the things you pointed out in your notes was the fact that they got 47% of all e-commerce spending over the Christmas period. I mean, that's verging on monopoly territory. Do you think the regulators must be really pricking up their ears at this point? And could that be a potential headwind going forward? Could we see some sort of repricing around regulation?
Yeah, and that was about 38% a year ago, so it just shows that uptick. Look, they have an iron grip on the consumer side. I mean, call it 90 million Prime users today. That's really their advantage, even though Walmart's been, definitely moving in the right direction. Look, I think definitely more regulatory crosshairs. You're seeing the Trump administration definitely a little more focused on Amazon, also on the EU side as well. So I think that is going to be a little bit of an issue. I don't see it necessarily as a risk, but that's something that's definitely going to be out there.
You're, of course, very bullish on the sector. You have a buy rating on many of these stocks. But they've got PE ratios. The multiples are extremely high. PE ratios for Amazon of over 300. For Netflix, it's nearly 200. How do you justify those valuations in your head?
Sure. I mean, look, that's always the conundrum, right? I mean, I could go back covering tech 20 years. There are some investors, they'll look at these companies on GAAP earnings, right? And you wouldn't own them until you're in a senior citizen home. So that's where really you have to look at the growth opportunity, what the total addressable market opportunity, and what the potential is for free cash flow and EPS leverage over the next 2-3 years. So I think you're going to see a lot of sort of upticks in terms of the profitability as you look out in the next 2-3 years, just given the growth and given what's happening on cash flow. That's the way that you really have to justify these names from a valuation perspective, almost a total addressable market opportunity. If you look at purely on an EPS basis, they're going to be sky high. You're not going to own them. So I think you need to have a blended way to look at it, which is how we view this sort of growth sector.
And I want to ask you about the race to $1 trillion, because there's a number of tech stocks that will potentially get to that $1 trillion market cap in 2018. Which companies do you see getting there in 2018, and which one's going to win? Is it Apple?
I mean, I'd say right now it's Amazon. I mean, just given the massive tailwinds. I mean, you're seeing that gap close, call it $700 billion, to 840 billion with Apple. And look, if you look at numbers, I think numbers come up for Amazon. They make more acquisitions. I think Apple still eventually hits $1 trillion, but they have a little more headwinds ahead of themselves. So if you said right now in this 2-horse race for $1 trillion, you'd say Amazon is probably the one that you'd bet on.
Are there any big companies do you think Apple's got its sights on, and Amazon as well, next year in terms of acquisitions?
Yeah, I don't see, in terms of Amazon, I think they'll build out organically as well through acquisitions in the pharmacy healthcare sector, and that's going to be a big area of focus. In terms of the big acquisitions, look, Apple's never been that big of an acquisitive company. Now the repatriation, it's sort of, is this the year they make a big acquisition? Do they go after content? Do they go after a studio? Do they actually go after Netflix, the long-rumored name that they should have done a few years ago? So this is kind of a, if they make a big acquisition or if they don't, it's a telling tale for strategically which way they're going, especially with $250 billion now in their pocket.
And just before we go, what's your top pick in the sector?
I mean, Netflix followed by Amazon is top sector pick. I mean, Netflix definitely, you have some potential clouds out there with Iger and Disney and the Fox acquisition, but ultimately that continues to be the name on streaming, especially the international growth opportunity.
All right, well, there you had it. Netflix, the top pick in the sector. That's from Daniel Ives, Head of Technology Research at GBH Insights. Thank you very much for joining us, and thank you for watching. I'm Victoria Scholar, and remember, you can always find me on Twitter at VictoriaS_IG.
Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.